Hello, listeners, and welcome back to another episode of Cognitive Dissidents. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me for our weekly chat on geopolitics and markets is Rob Larity, our chief investment officer. I don't have a whole lot of housekeeping notes for this one, so write to me if you have thoughts or comments about the podcast, or if you want to hear more about what we do at Cognitive Investments to grow and protect client assets. Jacob at cognitive.investments. Leave a rating or review for the podcast if you haven't already. Try not to get in too much trouble this Friday the 13th. Cheers, and see you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. All right, we are back at it. This is my last time recording from New Orleans for a couple weeks because I'm about to hit the road quite a bit. But Rob, you're still in Paris.
Yeah, as always. And it's beautiful as always.
Yeah, are you guys wearing tank tops there or bikinis in the streets? That seems to be what I hear with the heat wave.
Well, it's a heat wave, but it's dark and rainy. It's a dark and rainy heat wave.
Oh, sounds lovely. Well, let's not stray too far from our task. What people who listen to this podcast regularly will know that we're fairly bullish on the European Union in general. I've talked about some of our bets on that in general, but one of the positions we put on this week was short the euro. So I thought I'd tee you up first, Rob, to sort of talk about why you thought tactically that was a good move, and I'll probably pick up the baton from there, and we can go back a little bit back and forth about how our views on the euro are both evolving but also the same at the same time.
Yeah, so we did put on a tactical short position in the euro, and as always, there's two sides to every currency trade. There's the dollar side and the foreign currency side. So first we'll talk about the dollar side, and then we'll get into the euro side of things. I think the setup on the dollar side is this. The consensus view right now is that the Fed is really, laying off the rate hikes. We had two data points come out that were very big in the last week. So first, last Friday, there was the ISM Services Index, which is a purchasing manager's sort of survey of activity. And that came out way below expectations. So it showed a significant slowdown in the services sector of the economy, which is the largest part of the US economy. And things like prices paid and employment and new orders and everything just really fell below expectations. That was a big data point. And the second one was today we had the CPI inflation print come out, which was essentially in line with expectations, a little bit, give and take, and depending on which sub-segment you're looking at, but not a big surprise. But it was showing a deflation month over month, or a disinflation, I should say. And after the number came out, you had at least one Fed governor. We're recording on Thursday evening, Paris time. You might get more reactions after this, but at least one of them came out and confirmed, we're really going to lay off on the rate hikes. And now the market is pricing in almost a 100% chance that you're only going to get a 25 basis points hike at the next meeting. So basically, the market is saying the Fed is done raising rates at 50 or 75 basis points like we saw. So pricing in a pivot. So where am I going with this? All of this should be bad for the dollar. It should be good for the euro. It should be, interest rate expectations coming down. And finally, you're going to get the reversal of everything that you've seen. Well, I guess the view, or the variant view that we have from that consensus I just described, is that a lot of this has already been priced in well before now, first of all. People have been anticipating this for months and months. And a few things catch my eye. So first, even though you had that data point last week where the services survey really fell below expectations, the yield on the 10-year Treasury bond could not make new lows. So longer-term bonds were very strong in December as they began to price in sort of a pivot in the Fed's stance toward interest rates. And even though we should have hit new highs on bonds or new lows in terms of the yields, I know it's confusing sometimes, we couldn't do it. We couldn't do it on this data point, which to me suggests like the market is already pricing this in. It's struggling to make new highs in the asset class that should be benefiting from these data points. And that's a really important thing, because when I look at other data points that we follow and you see things like Chinese reopening, you see things like, European growth being better than expected. You see things within the US where, consumer data points are quite a bit better than expected, where CapEx is really better than expected in a lot of areas that we follow. It looks like you're almost getting a re-acceleration in growth in the US. And you can see this in like the initial claims data. So this is a weekly data point about the initial unemployment claims that comes out. That had been rising in the summer. And after that, it has been falling every week. And this week it hit a new low, which shows that those labor markets, despite, kind of the assumption that, everything's slowing down, are still very tight. So that was a really long-winded explanation of the US side. And I know it's hard to follow because it's like, here's what the consensus is, and here's our nuanced, different view from the consensus. But that's where I'll shut up and hand over the baton, because I want to hear some of your thoughts on Europe, the other side of the equation.
You know this, maybe not many of the listeners know this. In a past life of mine, I thought I was going to become a rabbi, and I spent a lot of time like studying the Talmud, which is an archaic set of Jewish law, which when you actually sit down and study Talmud, it actually sounds a little bit like the 5 minutes that you just talked about. It's, well, if this small thing connects with this other weird thing over here, and then if we turn this on its head, it must be that the answer is short the euro. I felt like I was back in yeshiva for a second.
And that's the hardest thing, because you got to take all of that and then turn it into this digestible bit.
Well, it actually makes me think that studying Talmud made me better prepared for my career combining geopolitics and investing than I ever could have thought possible. So listeners, you're often asking me for suggestions about reading. Why don't you go read some really arcane stuff about whether you should have 3 or 4 walls on the side of a sukkah and what can qualify. You might actually learn a thing or two about whether to short the euro. I've been feeling a little more pessimistic about Europe recently, and I've had trouble putting my finger on exactly why. I think I've talked before on the podcast about the sort of Philip Tetlock dichotomy between foxes and hedgehogs, which are, hedgehogs are the thing that they know one thing, they keep on banging the one thing over and over and over again. Foxes are the ones that can change their minds, basically all the time, and nobody ends up listening to foxes because they change their minds so much. It's easier to listen to the one person who is saying, there's going to be a global famine and 1 billion people are going to die, which is an actual take I heard this past week. And those of you who follow geopolitics know who I'm talking about. I won't say it, but somebody's out there saying that and keeps on saying it in like a bunch of different audiences, even though that's like probably not going to happen. Watch there be a global famine and I'm going to look like a total moron. Anyway, but I'm getting off track here. So I haven't been able to put my finger on whether I'm feeling a little more doubtful about Europe just because I've been so bullish Europe for so long. And the contrarian in me is like having an almost sort of instinctual reaction to be like, hey, we really need to gut check here. We've been saying the thing too often. Let's go back to it. Or whether I'm actually picking up signal that things in Europe are not going particularly well. I will say, I had Dario Fabri. We haven't released this podcast yet, but he and I recorded this week. He was very down on Europe, and he was very down on the Italian government's ability to make reforms that the European Union's going to want from them to disperse all those recovery funds that are supposed to be coming from them. Jacek's been on here talking about Poland's problems with the European Union. And while it was a pretty good week in those terms. Like the Polish government, it looks like they passed at least the first reading of a bill in Parliament that is a step towards those judicial reforms, but there's a long way to go between actually satisfying the EU on that score. And then the other thing here is, we started with the joke about the European heat wave. I mean, it's been like historically unprecedented, the level of good weather and good fortune that European energy markets have had. I was very bullish about, or I guess I should say, I didn't think there was going to be a European energy crisis, but even I didn't imagine that the weather was going to be this good. And I can't possibly imagine that it's going to last forever or ad nauseum, and that there eventually will be problems because, and we argue about this internally at CI all the time with Steve, who's one of the other analysts on the team. He rightfully says, well, what's your timeline, Jacob? Because if it's 2026, great. But if it's this year, like there's a lot of shit the European Union has to do this year, which they haven't shown the political cohesion to actually be able to do, not to mention like sort of the degree of difficulty with all the things that are going on there. So all of that is to say I'm feeling relatively foxy about the European Union and feeling like things have gone just about as well as they possibly could have. If you kind of look at, October, November is when sort of peak fear about Europe started. And that's really when European equities, like if you look at like ETFs with German stocks or Polish stocks, like that's when they started ripping. But I'm not sure that this like environment that we're in right now with with the super warm weather, with everybody has feelings about what the Fed is going to do that may not latch onto reality, and that actually affects things with the ECB. And then I just haven't seen that progress yet that I want to see with reforms. I haven't seen some of these countries putting aside these stupid issues and coming together on an existential level and saying how to save Europe. Like that's not exactly playing out the way I want to yet. Now there's a long way to go in the year yet. I'm not trashing the forecast, but all of those things have me a little more kind of circumspect than I normally am about Europe, at least on the short-term horizon.
Yeah, I can definitely sympathize with that. A few things that I've been thinking about. I find it a little troubling that Macron is using his political capital to go after pension reform and not other things that are arguably more important in the short term. That's number one. Number two, the Chinese reopening and sort of the bolus that it's going to provide German exporters and sort of that whole, any countries that are dependent on Chinese demand, I think it's going to make Germany feel more secure than they would otherwise, and less, with their feet held to the fire. And then lastly, just the progression of the Russia-Ukraine war. I mean, ironically, the fact that Ukraine has done so well, the fact that, the conflict has gone into more of a dormant mode because of weather right now, you don't really see a sense of crisis. Anecdotally, when I talk to people here, no one talks about the Ukraine war. You would not know it was going on. It's not something that is in day-to-day discourse, is causing worries, and that's different because 6 or 7 months ago, I was hearing people saying, oh, we're worried there's going to be nuclear war. And I haven't heard anything like that for a while. So that's the risk.
Yeah, I hadn't even thought about that, but the normalization of the conflict, it hasn't been as strong here in the United States. I mean, I told that story a couple of weeks ago where I was in St. Louis and I ran into Garrison Keillor in the airport, and Garrison Keillor is there. This is somebody I've wanted to talk to for years, decades of my life, looking up to this guy. And here's what I do, and what does he want to talk about? He wants to talk about Ukraine. Anytime anybody hears what I do in the United States, they want to talk about Russia and Ukraine. This is still something that we're talking about. We're providing them funding, weapons, all these other things. In some ways, it's much more front of mind for the United States. And I will say, again, it's just the first couple weeks of the year. I don't want to overreact too much, but I did in the forecast that I put out on Christmas Eve to the CI readers. I said, I'm still in the multipolar camp, but I'm feeling more and more like this is going to be a unipolar year. And it's been a great start to the year for the United States. Like gasoline prices are down, inflation is coming down. The U.S. and India, a trade group that meets regularly, talked about forming a new working group for new supply chains and new bilateral trade cooperation. Japan and the United States doubling down on their defense relationship. When you look around at the world, the country that is moving with some urgency, and which is not constrained like China is by this COVID situation or all these other things, is the United States. It's the United States that is out there that is making moves and strengthening relationships and changing supply chains and things like that. The Europeans, I mean, they kind of get there a little bit, like, to your point, like Macron is using some of his political capital on pension reform, which is, it's important from a French perspective. But Macron was one of the first ones to say, hey, this U.S. Inflation Act is bad for Europe. We need subsidies. We need to support European industry, things like that. And yet, like, what's actually happening there? We're just getting political statements and European Commission stuff. Like, I'm not seeing any of the kind of urgency that I would kind of want to quite yet. And weird to see the United States being the one that's moving with that urgency.
It's funny because I was reading about Haussmann today and the sort of recreation of Paris in the late 1800s and all the buildings that we're familiar with, and just what a massive, almost fascist, eminent domain grab that was, and the amount of political capital that Napoleon III needed to push that through was extraordinary. And I think the lessons are, number one, that Europe has an ability to do great things like that when there is the will and the political capital there, and especially in France because it's so centralized and it's a very, presidential system. But that, number two, if you don't have the political capital, or that's not what you're going to spend all your political capital on doing, it just doesn't work. Which is why, I would much rather see Macron banging the drum about this industrial policy, to counteract the IRA thing, which I haven't heard anything about. No one's talking about that here. Everyone's talking about pension reform and in domestic issues.
At the danger of making the same joke two weeks in a row, I would think the French Foreign Legion can handle the Irish Republican Army just fine, Rob. Like, I don't think they need to be worried about that so much.
But tying it just to what we're, why we're short the euro and financial markets, ultimately what I was trying to say with my Talmudic gobbledygook was, relative to expectations, we think the Fed is likely to be more hawkish with interest rates, especially if growth is re-accelerating in the US, which there appear to be some signs that it is. And by contrast, in Europe, if this is correct, and you really don't get the same level of sort of public investment that maybe we were expecting, then there's going to be less of an onus on them to hike interest rates to slow down the economy. Interestingly, if you look at the German yield curve, so we always talk about the yield curve in the US being inverted or not, and that just means our long-term bond yields higher than short-term bond yields. And normally they are. And recently they've inverted, which means the long-term yield goes below the short-term yield, which a lot of people take as a sign of an impending recession. In Germany, you haven't seen an inverted yield curve since 1994. And in December, the 2-year versus 10-year German Bund yield spread went negative for the first time since 1994. And that got more negative, markedly more negative in the last week or two, which is interesting because it sort of suggests that Mr. Market is saying, hey, the ECB is making a policy mistake, even with the limited rate hikes that it's done already, because the growth is not going to be there, or the inflation is going to come off the boil faster than people think. But it's not a particularly hawkish signal.
Yeah. And I mean, this is sort of tangentially related to what you just said, but I'm also beginning to wonder if, part of the thesis behind this being a pivotal moment for Europe was that they were facing this big crisis. And in some ways, the crisis hasn't really been as serious as people thought. Like, the Russia-Ukraine war has not caused like the sort of economic and energy impact on Europe that people thought it was going to because of the energy prices. So maybe in getting the European sort of energy crisis correct, I forgot to see that the follow-on thing was going to be that you weren't going to get the strategic impetus to actually push through some of these reforms that if natural gas prices were where they were in September, you might be getting, because like German industry might actually be thinking about deindustrializing at that point. but yeah, I'm sure I'll be back and bullish on Europe here soon. But I also, I mean, this is also like, one day and completely anecdotal and stuff like that. But I often, on mornings that I'm taking care of my daughter when my wife is at work, like I sort of put on a bunch of foreign, news channels and things like that. And I cycle through the French and the Germans and the British and I usually rely on the European news channels for like global perspective, and they were just totally myopic today. Like each one focused on things domestically. And I mean, in the US, we're always myopic. They were talking about documents in Joe Biden's house. Like, geez, wake me up when we get through this news cycle. But the place where you're actually getting real sort of insight and commentary about the world is like China, Singapore, Japan. Like those are even the news like diet there seems to be a little bit different than in places like Europe and in places like the United States. So I don't know. That might just be, the news cycle today, but I noticed that this morning when I had it on in the background too. Well, that's enough Euro bashing because, I still really like the Euro despite everything I just said. Let's move on and stay true to some of the things we're talking about. We did an emergency episode on Brazil. Do you want to say anything about Brazil yourself, Rob, before we turn to some other parts of Latin America and how that relates to metals? Or do you feel like we've said what we need to say about Brazil and folks should sign up for the SITREP to get the full analysis on Saturday?
Well, do you have any additional thoughts on Brazil's, in the few days since you did your analysis?
Just that I feel like the analysis is correct. I feel even more confident that it's correct. And in some ways, the tragedy of what's happening in Peru right now, like that's what state collapse and political volatility really looks like. Like Brazil across the political spectrum, whether it's Bolsonaro supporters, whether it's Bolsonaro from his hospital in Orlando, whether it's Lula, like everybody in the mainstream of Brazil is saying the same thing. This was not cool, that these guys are the radical fringe. Like none of this reflects like where Brazil is going and what Brazil wants to do. And in some sense, like the really loud condemnation from all corners of the Brazilian government was, I thought, much more intense than from the U.S. government on the original January 6th movement sort of thing. Like Brazil seems to me like, yes, there's volatility and risk and things like that, but it's not this huge threat to the government. Peru is a situation that looks like a big threat. Like that's what real political volatility looks like.
Well, we spoke about this because, again, tying it into markets, last week we talked about copper and, probably because we talked about it, copper prices went up, 20% in a week or something because we're just that good. But everything, base metals, everything raw materials, everything commodities has been on an absolute tear, as the Chinese reopening narrative just, the drumbeat goes on and on. And yet, if you look at Peru, it's funny how the market doesn't seem to distinguish between the different geographies of where this stuff is supposed to come from. So a company like Southern Copper, for example, which is SCCO on the New York Stock Exchange, has absolutely skyrocketed. And 40% of their business, of their mines, copper mines, are in Peru. So it's an interesting setup because I don't know how much people are paying attention to what's happening in Peru. But if that's, I don't know what the opposite of the baby getting thrown out with the bathwater is. They're the potential problem child that's getting rewarded with the star pupils, I guess.
Yeah, well, let's give listeners a little sense of what is going on with Peru, because I was on a call yesterday and somebody asked me about Brazil, and I said, "Don't worry about Brazil. Like Peru is what to be worried about." And both of the people on that call looked at me like I had horns growing out of my hair, because they had no idea what was going on in Peru. So let's just sort of walk it back a little bit. So we had an emergency podcast on the Peru situation from my well-named friend Elohim Monard, and basically like. The Peru protests took a little break for New Year's Eve. They all had a nice holiday and came back really with a vengeance here early in the week. And there were clashes then with those protests. Those protests turned violent, and there were clashes between Peruvian security forces and those protesters. At roughly the same time that those clashes were happening, the Peruvian government with their new president. Her name, I'm probably going to butcher her name. I think it's Dina Boluarte. I'm not going to learn how to pronounce it until like her security forces stop killing Peruvians in the streets. I think that's a good sort of quid pro quo there. But she actually won a confidence vote in Congress around the same time that these protesters were getting killed. So like Peru's Congress is behind her. She's kind of pushing forward. The Peruvian attorney general, or whatever they call the top prosecutor there, now wants to investigate Boluarte for like crimes of genocide and killing and things like that. In the meantime, the protests are still ongoing, and they're ongoing in places like Cusco, which is a popular tourist city. If you want to go see Machu Picchu, you kind of got to go through Cusco. So it's not just like, Peruvian cities. This is one there where there are lots of Westerners and foreigners running around. It's also a lot of the protests are happening in the southern part of the country, which was a part of the country that went for former now president Pedro Castillo, because Pedro Castillo was, people talk about socialists and Marxists a lot. He actually was a socialist and a Marxist. He really did want to change ownership structures around Peruvian copper and other mineral commodities and change tax codes and spread the wealth more, from his point of view, more equitably. And people in southern Peru, the people who work in those mines, who are the ones that actually do the grunt work, they liked him. They voted for him. They liked his goofy hat that he wore around. They saw in him somebody who was one of them, or who was at least looking out for their interests. And that's where the protests have been most serious. There was one protest group that said they were bracing for an endless battle. There was another government protest or anti-government protest, I should say, where a policeman was literally burned to death. So that's kind of the level of violence and dissent that we're seeing here inside of Peru. And I Elohim sent out a little sort of note to some folks that follow him, and I thought his view was a little kind of scary. I don't know that I would say that this is actually what's going on, but he said, if the politics of Peru can't quench the violence soon, he thinks the country's close to a military coup, and that in some ways what we're seeing looks like the beginning stages of a civil war anyway. I'm not sure I would go that far, but I would sort of point out there is no sort of consensus view in Peru about what is best for the country. It doesn't appear to me that there is leadership in the Peruvian government that has any sense of what to do for the country at large. And you are getting real violence and real clashes in the streets, and especially around places where a lot of that copper, Peru's the second largest copper exporter in the world, actually comes from. And, you mentioned Southern Company, Freeport-McMoRan is another one that has some exposure to Peru, and one of their big mines is also sort of in one of the regions that protests have been worse for. And to your point, this is sort of the last thing I'll stop droning on, but I've said this for a while now with Peru. It's a lovely test case about the limits of geopolitics and applying geopolitics to markets, because I've been talking about Peru now for about I think 8 months. 8 months ago was the first time I really sort of put myself out there and said, this is a bad situation. I think it's going to get worse. And if you were just sort of simplistic about it, you would have said, oh, well, if Peru's going to have a shitty time, maybe short Peruvian equities or, do something that way. And the Peru ETF is up since then. And it's up quite a bit just in the last couple of days, despite a lot of the violence. So you tell me, market wizard, how is it possible that I got the geopolitics so right, but that what I would have thought would have been the smart thing to do from a market perspective, armed with my geopolitical knowledge, I would have gotten my face ripped off if I had actually kind of gone in there with my level of confidence that I had?
Well, it's because you're too smart.
Oh.
Markets aren't looking at what's happening in Peru. The Peru index is up because copper prices are up a lot, and people are really bullish on copper. And Peru is viewed as, the high, in the parlance of finance, the highest beta, the most volatile, most levered way to play copper and commodities. So, that's probably about as far as it gets for most people, which creates opportunities. If Peru really does have significant problems where they can't produce the copper, the price can be whatever the heck you want, but they're not going to do well. And the companies that are based there are not going to do well. And certainly the banks that make up, about 30% of that index are not going to do well at all. So that's something that we're looking at internally as a potential short in our tactical macro strategy.
Yeah, it also wasn't the only story though. This was one that you brought to my attention about, I'm forgetting the name of the company now. but it was in Panama.
First Quantum.
First Quantum. So Canadian mining company has some kind of royalty dispute with Panama about copper as well, which seems to be affecting things too. It's been sort of a weird, interesting week for Panama. Around the same time that I started talking about Peru last year. People might forget, like Panama also had very serious anti-government protests last year, and that was in part around rising food prices, sort of political dissatisfaction with things like, high commodity prices and not being distributed equitably everywhere else. I remember speaking to an audience in July in Wisconsin and being like, hey, I don't think this is going to happen, but there are anti-government protests in Panama right now. What if the Panama Canal closed down because of the protests? Didn't happen, and things kind of went away. But just to point out that this is Panama is also a country where it's not like things have been great or stable in any kind of meaningful way. I doubt that this royalty clash over a mine is actually going to be the thing that sets things off. But this is not a place that has been particularly stable either. And there are few countries in the world that are as geopolitically significant as Panama that we probably don't talk about enough.
Yeah. In itself, it's probably not a huge deal, but it's interesting how it illustrates the issue of, as political risk rises in these places, you sort of get these self-fulfilling cycles in a way where, the environment gets worse, like in the Panama example. So this company, First Quantum, they developed this mine. It only opened a few years ago. It's a very new project. And then the finances, the fiscal situation of the Panamanian government has deteriorated because of a lot of reasons. And then they went after these guys to, try to really up the royalty rate and put in this huge fixed minimum and stuff like that. And now the mine, First Quantum, is threatening to close the mine, which wouldn't be good for anybody. So that would make things worse, So you sort of see this as risk ratchets up, it begets more risk and more extreme remedies to fix the risk, which therefore makes things worse often.
Well, and I will say too, I think a word that we have to get back into our vocabulary is nationalization of resources and assets. Somebody should do a graduate study or a PhD thesis on, and probably somebody has. If you're listening to this and you've done the study, please send it my way, about nationalization of resources, like during the Cold War and the different governments that did that versus the unipolar moment of the last 30 years, and whether there was a huge difference and whether we've seen an uptick. But I think one of the things to be watching for, and this is true in Peru, it's true in places like Chile, Panama, we are getting down to sort of the issues about, well, who owns what resources on the ground? If there is high inequality due to globalization running, roughshod over the world for the last 30 years, how are governments going to divvy up some of those profits and create greater equality? I think we're probably going to be talking about nationalization a little bit more, especially as these resources become more and more important. And I mean, one of our positions in CI Equity is in relation to a gold mine in Turkey, and thinking about how the Turkish government's going to think about that. We should probably go back and refresh that work, because I don't think that probably nothing has changed there. But before we even sort of took that position, we had to think about, well, what is the Turkish government going to do? Are they going to change their definitions or their relationships with what's going to happen with different mines? I mean, I think that's a much more operative risk than people kind of are expecting, and it's one of the reasons. When people talk about electric vehicles and things like that, actually go and look at the mineral commodity breakdown of what it takes to build an electric vehicle versus a conventional vehicle. Actually think about all the minerals that are going into all these green technologies and stuff like that. I'm not saying that to poo-poo green technologies. If we talked about my political biases, I'm generally for saving the environment and the world. I think that would be a good thing. Even more so, have you been watching this Netflix special with Morgan Freeman narrating the universe? It's really great. It makes me feel really great about the world. Anyway, it makes me want to save the world in general. I'm in a good mood today. I just keep on going off on these tangents that have nothing to do with anything that we're talking about. Yeah, just look at those mineral commodities, because those minerals are going to become much more valuable as resources to these different states over time. And if we're right about some of our longer term forecasts, states are going to want more control over those commodities. They're going to want to be able to control those commodities and distribute the gains from those commodities more equitably.
Yeah, there was really two headlines in the last few days that illustrate that pretty well. The first was today, there was a piece in the Financial Times about Saudi Arabia allocating a big chunk of cash. I think it was $15 billion, which for them, I think that's how much they paid for Newcastle FC. So maybe it's not that big, but a big chunk of cash to go out and buy stakes in mining companies and projects around the world in minerals that they thought were crucial for them to have access to. And then the other thing that was interesting is Vale, the big Brazilian, iron ore and other miner, is thinking about spinning off its non-iron ore business. And it was saying that it's gotten a lot of interest, not only from sovereign wealth funds and states who are interested in taking a big stake in that spinoff, but also big auto OEMs. So that's another aspect to this that we haven't really talked about. It's not just states that are scrambling, not just to seize assets and spread them around equitably, which is really more of a emerging market thing, but to get and secure those supplies. And now they're competing with multinational corporations like GM. Look at what GM has been doing as far as securing, battery capacity. And, they're a player on the global stage, just like, the state of Saudi Arabia is.
Yeah, absolutely. Before we leave this neck of the woods, you brought up, I think you posted on the Knowledge platform, this weird thing about Iran posting warships near the Panama Canal or near Panama, and you asked me to look at it real fast. And I just want to read. So apparently, some like Iranian admiral, he might even be a command. I can't figure out from the translation here whether he's the commander of the Navy in general or whether he's just a naval commander in Iran. But here's the translation of his quote that's causing this reporting. So, today we have a great opportunity in the sea area for the development of the country, and we can turn this gift from an economic capacity into a civilizational capacity by using the maritime capacity properly. Today, the use of the sea is a geopolitical advantage for us, and those who do not have this capacity are suffering from geopolitical suffocation.
It's a lot of capacities in there.
That's a hot, steaming pile of bullshit. The idea that the Iranian civilization is rising to naval power and has its ships all over the place in different straits in the world. I'm somebody who, for a long time, has been thinking that the United States and Iran are going to have better relations, and that the interests of both countries are more congruous than their governments really let on. But man, Iran, I wouldn't mess around in the Panama Canal. If I was you, I would let it just go to statements that get translated into weird articles and tabloids, because that won't end well for Iran in any case if it actually tries to do anything like that.
Well, let me ask you a question, because there was two things on the Knowledge platform about Iran that I wanted to get your thoughts on. The first is that one, and then the other one was this thing you posted about Iran building major rail links in the southeast of the country. Trying to build connections to India and hooking up with Russia and bypassing a lot of the sort of Western supply routes and stuff. And my question to you is, that seems pretty ambitious, first of all, and combined with this kind of ridiculous statement by the naval commander, are we seeing the IRGC, are we seeing the regime starting to kind of openly get more aggressive or openly try to, flex its muscles and have a little bombast in the mix more than usual, because they're trying to show that they're in charge because they've been under such pressure and threat? Or is that reading too much into this?
No, I'm glad you brought that item up, and this actually goes back to what we were talking about with Europe. Like, Europe's the only one that seems to be sitting on its hands and twiddling its fingers. Like, Chinese officials are touring Africa this week and talking about rebuilding Ethiopia after the civil war and going to Angola and visiting all these countries that they want to have relationships with. The United States trying to build trade ties with India, doubling down on its defense relationship with Japan. The reason to take the report you talked about Iran building all those rail links a little more seriously, because That's not just Iran, and that's just not some dude spouting off to the media. That's in conjunction with Russia. So one of the first things Putin did in the first month after the Russia-Ukraine war, Putin was going around showing people maps about, this is the new geopolitics of Russia. These are the new trade routes that Russia wants to have. And Iran was at the center of all of them. I mean, Russia was sort of thinking about, okay, if we can get down through the Caucasus to Iran, get to the Persian Gulf, there's an outlet that way. If we can cross over and build infrastructure across the Caspian, across India, like those are all things that would give us alternative supply routes and trade routes than we're used to before. So I think the thing to see in that is that Russia, even though it's down, it's not out. It's thinking strategically. It knows that it's really in a difficult position, hemmed in by China and Europe and all these other things. So it needs to kind of find alternatives, and there really aren't that many. And also that, it just goes to show you the forecast that I made, not this year, but I guess it was in 2021 for 2022, that we were going to see some kind of return to the Iran nuclear deal between the U.S., just how absolutely wrong that was, because Iran and Russia, even though historically are competitors, and even though are still competitors in places like the Caucasus and Central Asia, they've made common cause. They are both identifying as on the opposite side of the U.S.-led order. They're not interested in compromise with the United States right now, and they are trying to build structures that allow them to be less dependent on the United States and to be less dependent on some of these supply chains that have already sort of cropped up. Now, it's incredibly ambitious. Like we're talking about, this is not something you can just decide to do in February of last year, and suddenly you're going to have brand new supply routes, through India, and you're not going to be dependent on your old trade routes anymore. I'd also say, note that India seems to be at the center of all of this. So we've got the U.S. trying to negotiate trade deals and supply chain deals with India. At the same time, you've got India importing Russian commodities. At the same time, we're working with Iran. We're doing this. We have to import oil from the Middle East. I mean, India is at the center of a lot of these different things and likes to play all sides. It's why they don't want to be sort of, in any one camp in general. But yes, I would take it seriously insofar as, 10 years from now, when I think we will be in a multipolar world, all these boring stories about, we built a rail link here, or we lessened our dependence on this trade route over here, or now the Arctic is open to shipping a couple more months out of the year and more reliably. Like the sum total of all those little things in 5 to 10 years' time will be those supply routes and those trade routes, and they'll all look completely different. So it doesn't happen overnight, but it's sort of the slow glacial movement of that change happening. And I that report was just, it had that Iranian bravado. They wanted to show you that's what they're thinking about. So they bragged about how many miles or kilometers of rail link that they were building and things like that. So I wouldn't take that story itself quite seriously, but I would take the general concept and the idea of Iran and Russia as being aligned, and Iran being a civilizational power of its own, trying to rejigger supply chains in a way that's good for it. All that stuff is very real, and it's going to affect things over the course of years, if not decades.
And on the subject of India, I wanted to ask you this as well. I'm glad you reminded me. So we don't talk about India that much on the podcast, and we sort of have a mixed or maybe muddled view of whether we're bullish or bearish or somewhere in between. But I wanted to ask you, one of the things we've talked about is infrastructure, the fact that there's so much obvious stuff that they need to do and build that they've failed to do in the past. And my question is, what are the guideposts that we're using to gauge whether they're overcoming that? And the reason why I ask this is because on the knowledge platform in the last 2 weeks, a few things caught my eye. The first was, so today India came out with its industrial production numbers, and they were really way stronger than expected, which just got me thinking about India. They were up 7%. It was expected that they would be up 2%, which is a really strong number. And India has really surprisingly gone from strength to strength. They've not really suffered from any sort of global slowdown in a major way, which is interesting. The second thing is there was a piece in the Financial Times about this train system that India has built, where they've built not a big network, but a network of what they call semi-high-speed trains, which don't go as fast as the TGV here in France. I think they go like 170 kilometers per hour, and these ones go 270. But they work, and people seem to be using them, and they're connecting, Bangalore with, I forget which other cities. And Modi has said he wants to build 70 or 75 additional lines to the, I think like 20 that they've built so far, which is interesting because building trains is, by definition, you need to have some eminent domain going on there. You need to move people physically out of the way of the track, which has always been an issue in India as far as building infrastructure and getting things done. And then the third thing, which is sort of a sad thing, was I saw, I had seen a piece that I put on there about groups of sort of Muslim villages being rounded up and forcibly moved in order to build stuff. And I forget the exact details of this, but it was people complaining and saying, hey, this is becoming more and more of an issue. In this case, these were Muslims. But my understanding is that it's, it's not just Muslims that it's happening to. And I just wonder, like, what are we looking for a sign that they're building? You know what I mean? That they're actually doing some of this stuff, whether in a good, in a good way from a human rights perspective or not, whether that's actually going down.
Yeah, I thought I was going to have a really great guest about India come on like 6 months ago, and he ended up canceling me at the last minute, and I haven't been able to follow up with him. But I was thinking a lot about India then, and I think about India a lot, probably not as much as is reflected sort of in our conversations on the podcast. I'll have to also go back and refresh. Around this time last year, I sort of put together one of the earlier sit reps for the year was sort of about India and some of the things that I would look for. And, some of them are boring indicators like, what was it, gross fixed capital formation and things like that. One of the best sectors to look at infrastructure, I think, with India is to look at water, in part because the Indian government keeps really good data on water. It doesn't keep good data on just about everything. And India's been depleting groundwater at a ridiculous rate. And so because it isn't building the infrastructure that you need to actually have, water without taking it out of the ground. So if you saw like a deceleration of the amount of like sort of groundwater that they're wasting and things like that, that would be good. If you could get data on like food wastage, like one of the enduring memories of covering the pandemic the first month or two to me is, the pictures of Indian crops just sitting out in the rain on, tarps, because that was the best that they had to do for storage. You talked about trains. I loved what you called it, semi-fast trains or something like that. Like, yes, we will now build semi-fast, mediocre, like we are going to invest in mediocre trains that are not quite as fast, but not quite as slow as everywhere else. But, and I'm not saying what I'm about to say tongue in cheek. I mean, when Modi first came to power, I remember vividly one of the first like priorities that he talked about was like, I forget what the numbers were. So forgive me if I get the numbers wrong, but it was something like, by the time my presidency or my leadership is over, I want to make sure that 100% of Indians have toilets in their houses, because only 30% of Indians or 40% of Indians today have reliable indoor plumbing and toilets in their house. So like, I mean, that's like, India is an incredibly poor country. Like GDP per capita is similar to Haiti, like one of the poorest, most corrupt countries in the world. So like, India knows what infrastructure it needs to use. It's got a powerful Modi government, which I think is going to get another term. But in sort of point of fact, when they've tried to push through the things that would actually make change, they come across all these vested interests. They haven't been able to do things the way China did when it was moving people all over the place. And I think you put your finger on the thing that is most controversial about India. And I've gotten a lot of hate mail from Indians and from when I sort of point out, hey, like, it's nice that we talk about Taiwan all the time. I remember what India did to Kashmir around the same time that everybody was talking about Hong Kong and Taiwan. They just rolled in there and got rid of their special status and cut off the internet and troops on the ground, the whole 9 yards. And yes, we can argue about, that status wasn't meant to last this long, and there's problems with Pakistan and it's their fault and it's a breeding ground. Like, fine, like all of it. But like, you're exactly right that the byproduct of sort of a more Hindu nationalist unified India probably means, bad news for Indian religious minorities. For a long time, India has been sort of a paragon of tolerance and sort of let everybody sort of do their own thing. It's different languages and different castes and different cultures and different things like that. And in some ways, the things that India needs to become a more unified country will probably have deleterious effects for those that are sort of lower on the totem pole with whoever is in power. So I'm rambling a little bit to say, like, there are indicators we can look at for how Indian infrastructure is doing, but my base case is still going to be at a countrywide level. It's just not going to happen. Now, there are parts of India where I bet you'll get great infrastructure. I bet there are parts near the coast where US companies are going to set up shop and you'll have the best factories and some of the best infrastructure and all those other sorts of things. But I don't think it's going to be countrywide. And when you think about India, I think you have to think about sectors and regions and sort of treat it like it is a bunch of different countries rather than treating it like it's one country. I think that's the best way to kind of go about doing it.
I think the same goes true for the way to approach markets in India as well. Is, it's funny, you talk about, investing in different countries and the ETF for Peru. Like the ETF for Peru has like 8 companies in it, and even in Europe, there aren't that many publicly traded companies. People don't treat them the same way. A lot of them are family controlled. They don't trade well. The whole way of approaching investment that we as Americans are used to is not applicable in many parts of the world. We've talked about China and how the information is no good and it's a more speculative and technical market, et cetera, et cetera. India is a real outlier. India is much more like the United States in that regard, as far as there are thousands of publicly traded companies. They tend to be run in more of a American way, in the sense of there's actual information. My vague sense is that there actually exists like a value investing, group in India of people who actually analyze companies and think about them the same way. And there's a lot of scope to apply that because there's so many different companies and they actually trade, and, obviously not to the same scale remotely as what's the case in the US, but relative to other emerging markets, I think there's an opportunity to really take the time to dig in and pick stocks in India. Because, this is a geopolitics and markets podcast. We're usually talking about things at the index level. Maybe the response on India is just, it depends. It depends on which company, which region, which industry you're talking about at any given time. And you can't generalize.
Well, and there's also the thing with India that I always go back to, which is maybe we're being too clever for our own good. It's over 1 billion people. They've got some of the best demographics in the world. They're not Pakistan is a threat, but, India is the superior power there. Like nobody else is really going to threaten them. They'd have to suck pretty bad not to do well. But I also take the point there that if just the raw numbers in India are in some ways enough to cover up a lot of the warts that in smaller countries, you wouldn't be able to do because there's just not that scale. So
quantity is a quality all of its own, right?
If that's true, then India is the winner because they've got more quantity and are going to have more quantity than everybody else for quite some time. So, well, I think that's it. Anything else on your mind to tell the listeners, Rob, or should we let them get back to their business?
No, I think that's the extent of our brilliance this week.
Okay. Well, such as it is, cheers, and we'll see you out there, folks. Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.